Fixed strike vol, we saw a 6% rally in the market on S&P. This is the bloodbath in volatility. You can see all these upside calls getting absolutely destroyed. Order of magnitude of 5 vols on the upside there in November, 3.5 vols in December, and about high 2s for Jan. So really, really strong kind of pressure coming on vol across the whole surface, particularly upside. You can see here, these vols are now looking on an 11 handle, pretty much everywhere from 4,500 and above. And we have been realizing about 18, 19 on S&P recently. So that is looking much better value now. And now that vol has reset this much lower, if people are bullish and think there's more upside in the market, then these upside calls look like a good way to play that. So we might start to see some demand come back for this part of the curve, to play further upside. Wrapping things up with the VIX, see these massive red bars here on the VIX, absolute destruction of the VIX curve. We saw 4 to 5 vol moves lower in the futures. Spot was down 6 vols back to sub 15. Really dramatic move. VVIX actually led the move. You can see here VVIX turned south earlier than the VIX did. It's actually dropped 20 vols on the week and it's down to 83. The roll down's back to 5%, which is a bit more normal. I mean, it has definitely got room to stretch towards 10%. Like somewhere between 5 and 10% is normal for the roll down. The VIX beta is falling as well. That makes sense. As the level of the VIX drops, you would expect the beta to drop with it. So that's quite consistent. And in terms of option flows, really, most of what we were seeing was monetization of puts as vol was collapsing. So 16 to 19 strike puts getting taken off to take profit. We're not really seeing a material amount of call buying. No one really seems to care about the upside right now in VIX. We personally, like we said, we rolled out in the money puts on VIX into December. That was a trade to regain some leverage and play some more potential downside in the VIX.